much for coming. Big pleasure to welcome Juan Grigera today. He's Senior Lecturer, Department of International Development at King's College London. But really at heart I consider him to be one of the main Latin Americanists with Latin American studies scholars out there. Deep commitment to and from the region, and someone who I'm always keen to hear your views about. Today he'll present about El Salvador and the Bitcoin experiment. This is part of a larger research project. I think you mentioned a bit about that as you go along. But without further ado, the floor is yours, and thanks very much for coming.
Okay, well, thank you very much for coming today. I think this is one of the topics we started with colleagues from University of Austria in a project that we call Remittances, Bitcoin in El Salvador. And we couldn't realize how topical it would become over the years. I'm sure in the Q&A we can go there, which is not my main expertise about the current development of cryptocurrencies, but rather this. I want to present the research, which is a 2-3 year project around understanding what was the Bitcoin experiment. And I already say it was because I think we are seeing somehow a phasing out of it. Oh, please. I think one of the key things where I should start is it was a bit of a surprise for most of the commentators when El Salvador, which was not in the map for most of international relations scholars and for many people even studying Latin America, decided or announced that it was adopting Bitcoin as a legal tender. And it was a surprise on one regard, which is the announcement was done by the president himself on the Bitcoin conference before even passing it to Congress, so 2 months before. And then it went to Congress and had the long discussion of 3 hours and was approved. A very short law, 800 words, that had around 7 different articles that dictated quite like an innovative thing, saying we, for the first time in history, a state adopts cryptocurrency as legal tender. It was not a surprise in different ways for anyone following the multiple problems around currencies in the region, and more broadly for countries who have different constraints in the very hierarchical structure of currencies in the world. So there were other experiments of like not using Bitcoin but rather their own cryptocurrencies. There were already initial experiments around CBDCs, so central bank-based digital currencies, and in a way this was part of that chaotic search for alternatives to the US dollar. This will be one of the arguments. So it was a surprise, as I said, but not necessarily one complete outlier. And we should not forget the context of big economic shifts around monetary policy and geopolitical changes. Now, the second thing to say is that we should contextualize this decision by El Salvador among specific constraints. So, for instance, I mentioned CBDCs. That was not an option for El Salvador because they don't have their own currency. So the colon, which was used to issue the currency, it was phased out, and they adopted official full dollarization in 2001. This is one of the few countries like it's. So in size of GDP, the biggest is Ecuador. The second one is Panama, who never had their own currency. So it's a slightly outlier. Ecuador dollarized around the same time than El Salvador, and then El Salvador is the third one of relevant size. Bahamas being another relevant. So it's only a few countries all around the region that don't have their own currency, rather have dollar as their legal tender. They do have a central bank, but their functions do not include monetary policy. So this is something that's very important. And I'm mentioning this because it was missed in a lot of the commentary around El Salvador and discussing whether they have lost sovereignty over money or not, missing a very important point. Another very important point that I think I will make all through this presentation is that El Salvador has a very specific insertion in the world market. And that has to do with the massive impact of something I put in the title, so not to forget, which is remittances. So remittances constitute 25% of their GDP. And this has something to do with money, of course, and international transactions. This was seen and can be seen as an experiment, and I will come back to this at the end, trying to discuss what an experiment means. It looks like it was an initial adoption, as I said, 2021, quite likely, slightly different context than the one of today. And there were many agreements around between December and January 2025, so December 2024 and January 2025, that look or hint that this might be phasing out. Maybe the end of it is being phased out. We'll discuss how and why later. So when you look at the academic literature, as I said, like broadly speaking, the commentary on El Salvador and Bitcoin had two different natures. One was very much following the internal politics and explaining what Bukele's thought and their internal political dynamics, and the other one was commentary around Bitcoin and whether it's useful as a legal tender or not. And both had their limits, and I think had some hints on points that I will take. But they were missing some of the key problems, in factoring in the peculiarities of El Salvador and the peculiarities of the specific moment of the world market and currencies. One of the most what we call the EMIC hypothesis, one of the most common themes around explaining what happened in El Salvador was picking up on what Bukele and his party said of why they adopted the Bitcoin as a cryptocurrency, and then trying to assess whether this was true or not, or whether this was effective or not. So they picked the idea that this was done to go for financial inclusion, and that it was a way of modernizing the country, that it was done in order to increase the visibility of El Salvador for different agencies and investments and so on. And you could go on, but I think there is a specific limit in trying to understand any policy by what the president says. I think you have to definitely pick up on that with a pinch of salt. There's always something that's interesting around that. But understanding public policy and understanding also that what I already mentioned, that it was not completely isolated from the region. There's something more. There's something behind that we need to explain. The financial inclusion hypothesis has a lot of papers, I would say, lots of research has been revolving around that, and has to do with the fact that it was presented as a way of banking the unbanked. And those of you who follow the financialization literature, like the unbanked and those who don't have a bank account and don't have access to banks, and how we extend finance to them, whether to include them, which sounds good, or whether to include them in a structure of domination. That's not the main point, but definitely carries its weight. Obviously, I would show that of all the plausible hypotheses of why to adopt Bitcoin, this seems, as a legal tender, this seems the least plausible one. If you want to go for financial inclusion, you would not pick one of the most niche, complex technologies available out there, which includes many levels of digital literacy and digitalization and connection to internet and so on. I will show some of the structural features of the Salvadorian economy and showing why this was not the main reason why they wanted to do this. Another very important hypothesis has been, as I said, praised and is still quoted these days, is that this was a PR stunt. So why do this? Well, because Bukele wanted to switch slightly the agenda and show some modernization alongside what it was an authoritarian populist / strongly authoritarian regime, and then this was showing this like a different tune, so showing moving the agenda beyond, so a distraction in a way. Others also even said that this was to gain popularity within specific sectors of the Salvadorian population and offering the middle classes some sort of again, around modernization anxieties, technological advantage. And then around, again, to attract the attention of international actors and showing how they could be at the forefront of incorporating technology. If you go one by one on this, I think I will start with saying that Bukele, and this is for a different discussion, is one of the presidents in the region that needs no argument to have more popularity. He is amongst the most popular ones in the region in terms of acceptance. He has acceptance rates around 80%, even after having been many years in office. He survived the pandemic, unlike almost anyone else in the region. There are other exceptions, but let's not get into that but he definitely does not need popularity. And when you look specifically at the popularity around these two things I mentioned, so one is high levels of authoritarianism and repression, and the Bitcoin policy, most people reject the Bitcoin policy and support him on the mass incarcerations and the repression of the marks. So definitely, if that was the rationale for doing this, definitely doesn't play the way he expected. Internationally, that would be a different thing. We could discuss that later on. In terms of geopolitical strategy, and the other way, there's been lots of speculation around how to move away from the US dollar. So being a dollarized economy is fine until you wish to cut some ties with the US. And this is obviously something on the agenda of every single country on earth around what we could call the multipolar world, or the influence of China, or all the different relations. And definitely there is something there that has to be explored, but definitely quite a bit early on to decide on those things. So I think all those explanations have strong limits on what they do, on what they offer, and they don't factor in if you go back to those. None of them mention remittances. None of them mention dollarization, but only margin. And I think those are key features, and that's where I think we should start the analysis. So what I will do in the next 20 minutes or so is try to show that we have to look at. First, contextualize El Salvador a bit. As I said, it's not common. Unlike other countries, it's not common that you assume, even in the Latin American department, knowledge about El Salvador. I will review these two key features of the economy and see how they play in the question of Bitcoin. And then I will go back to some theorizing of what Bitcoin is and what Bitcoin can be, to try to see if that illuminates the role it played. And we can discuss what this experiment was and what was the role of it. So, just very basic facts which are interesting not to forget. When we speak about a country that tries to be at the forefront of digital innovation in terms of payments, right, which is using a cryptocurrency, an existing cryptocurrency for payments. So it's a lower middle income country, GDP per capita equivalent to Bolivia or Paraguay, just to right, so similar to that. I think the only one that's really below it in the region is Haiti, but it's between the lowest of the region, so definitely not like others. Sort of economic structure, not particularly rural, but large or important or significant amount of people living in poverty. That's less than $5 a day PPP of 20. So like the old $3 a day, right? So that's quite a lot. Highly reliant on remittances. This is what I mentioned. 24% of the GDP, and I will come back to this. Comes from remittances, mainly from people migrants, Salvadorian migrants in the US. 97% comes from the US. Again, not uncommon in the region. Lots of informality, not particularly high unemployment, and then even though 60% of activity, so it's slightly low, so some withdrawal from the market, possibly related to the remittances. So because you have remittances, you don't search for jobs. That's what people are asking. Dollarized economy since 2001, and it went through the also classical in the region periods of exports. So primary exports around coffee in the 20th century, neoliberal reforms in the 80s, some diversification to cotton, and then different forms of financial services. The remittances also have a lot to do with financial complexity in the country beyond what you would expect in a country of that GDP per capita. Some limited post-Washington consensus. So again, there's nothing too specific here, but the remittances and the dollarization thing, which we should not forget. So why do they dollarize in the 2000s? I think is the first thing to ask about, and I would say there's been a lot of discussion, particularly because Ecuador went first and had already seen some of the detrimental impacts of dollarization. And again, a different context. 2001, the peak of neoliberal reforms in the region. Still, we haven't seen all the crises of particularly Argentina and in 2001 later on. And the idea was that because the economy was highly integrated with the US in terms of exports and also in terms of remittances, it was gonna be beneficial in terms of lowering transaction costs, right? So why have a different currency? To add to the credibility of the currency of investments and allow further investments in the region. This was again an argument in favor of that, and attract investment to the region. You can imagine none of that happened. Maybe transaction costs, even though they were quite low already. A lot of the banks in El Salvador had lots of different mechanisms to bring those remittances home, which were back then around 10% of the GDP. And this was obviously a very important financial instrument. And I will show how complex that network is, because within those 25%, there's a massive variety of things happening in terms of how the remittances work. You can ask questions if you wish in the middle. I don't need to go 25 minutes. I saw some faces there. So dollarization had an interesting cost in terms of around 3-4% of GDP of the actual cost of doing that. You also lose not only seigniorage, but also you lose the interest rates of having your reserve currency that you use for circulation. So all this is there. The big unexpected thing that also happened in the case of Ecuador, having inflation in US dollars, that was not expected, and I think it was a surprise for most analysts. And then, you still have also the recurrent cost of having low denomination dollars physically available to have as M1 circulating in the country. That's still something you can mention. And vulnerability to shocks, which is not new. So this was 2001. I think there's lots of discussion of whether those changes actually had any further changes. I think the other one that we could mention is like slightly unrelated to the dollarization, which is the privatization of the internationalization of most private banks. They were used to be owned by Salvadorian elites, and then they began to be owned by international capitals after 2004 to 20. So we have now Bukele, who will come with a new agenda. More broadly, I think you probably have heard of him. Elsewhere, he came with what I call the populist agenda, whatever that means in a way. I mean, there's many meanings to that. But he played the game of being an outsider. He used to be part of the Frente Party, and then he accused that front, which was of being the neoliberal party 2.0. So Arena was the Arena 2.0, and then he created his own party, which now dominates Salvadorian politics quite closely. He has this millennial grounding. I think there are some pictures here and there of him wearing a cap, looking backwards and so on. He went through a classical populist reform of judiciary, fired 1/3 of the judges in the country, reformed the Supreme Court, and so on, and then implemented as I said, highly popular, harsh security policies with mass detentions, particularly increased since the state of emergency in 2022, when he had a big clash with the gangs, drug cartels of the country, 2 of them which are really important. So when he declared the Bitcoin as legal tender, as I said, it was surprising in one sense and not surprising in others. The law itself was allowing, and this is important to understand what exactly it means to be legal tender. because if you read the law, you will be confused. And it says, for instance, Article 3, that you can pay taxes. That every single Article 7, that all and every single actor in the economy has to take payments on Bitcoin. Even though on Article 12 it says that it's only if you have the technical capacity to do so, right? It says that, for instance, in Article 6, that the US dollar is still the unit of account for all accounting purposes, while in Article 3 it says that prices can be expressed in Bitcoin. So it's quite confusing, and as I said, it's only a couple of hundred words. There was then, after that, followed several documents from the central bank trying to implement and discuss some of these technical capacities, which were also, this is important to mention, completely new. There's no other country that had done this before them. And there are many questions on for instance, to which extent you allow for conversions between Bitcoin and US dollars. You cannot be a small country of the size of El Salvador guaranteeing conversions forever. They definitely said they were not going to guarantee any price, and it will fluctuate. But then that, particularly for the volatility of Bitcoin, opens other questions. They say they will promote this use for remittances, I will explain, and inclusions and financial inclusion. They back down on the mandatory acceptance of Bitcoin. I think the ambiguity of it is the same ambiguity we have, for instance, in the UK with cash. Supposedly cash is still legal tender, but you go to places, we are credit card contactless only, right? So we don't take cash. So you can take a lawyer and maybe win that case, but who knows? Try with the train next time you take it. They created an app called Chivo Wallet that had $30 for each of the for each member, for each citizens of El Salvador. So you had to go with your identity card, you could open an account and download Chivo and use it. That was a big incentive to use it. Central bank was allowed to buy reserves in Bitcoin, which interestingly enough, the only record of them was Bukele announcing them on Twitter, till the point in 2023 where he said which was the account he was buying to. But there was no official record of how much Bitcoin he bought and how much was lost or won anyway. Depends on when you pick the price of Bitcoin, whether it made a loss or not. So now definitely they made a small move. In terms of the Chivo wallet, it was a way of promoting the usage, so you only needed a cell phone. And this, for those who know Bitcoin, had built the layer called Lightning Network. Transactions on Bitcoin, on the blockchain, take between 15 to 20 or more minutes to be final, and that's obviously a problem for any day-to-day use. So they use an existing technology that allows for a transaction to be immediately available. You can go on, and that creates other layers of complexity and also levels of centralization. Right? So unlike the blockchain, which is decentralized, Lightning Network relies on a centralized array. I'll go to that in a second. So what happened here is that they did this initial push. Lots of people most people download the Chivo wallet. They extracted the $30 they had, and then they stopped using it. 60% of the people only did that. Now, the question is, why would anyone try to do this? And we come back to the main questions of structural problems of the Salvadorian economy. I think I made the point already, and I will come back to it, that you need to understand remittances and the role they play, and also dollarization. And I will go to those two first, and then I'll try to explain why Bitcoin specifically can play a role there, and then assess whether it did or not, which is slightly different to the motivations behind this. In all these movements, I think it's very important to understand that the Salvadorian politics are quite peculiar. So some things, as I said, were announced on Twitter before being approved by Congress. You also have different forms of, even as I mentioned, the institutional record of some of the things were not completely clear. But that is not, I think, that's not uncommon in other domains of Salvadorian politics. So I think one of the problems people have, and myself included, is trying to think that this is that the fact that, for instance, Bukele's brother was involved in policy making is something peculiar to Bitcoin. That's not the case. That's essentially a feature across the functions of the state. So we should not overinterpret that as a specific thing. A lot of the commentators again pick on that as if that explains something good or bad, or usually bad about Bitcoin itself in itself. So let's go to the question of remittances. I think it's very interesting to look at this from a developmental perspective as well. So this is remittances in the region as a share of GDP, and you can see that they have been systematically increasing since 1990s. A lot of this has to do with also an increase in the formal channels through which remittances are sent to these countries. If you look at the year 2000, this is all obviously formal statistics. Central banks have been trying to capture all the remittances in all the different forms. And if you look at this, 30%, the estimates of the year 2000 was that only 30% of the remittances were coming through formal channels, and everything else was coming in cash or through other means, right? So this is interesting that now that figure is 95%. So a part of this, which is difficult to capture in statistics, has to do with formalization. But a lot of it also has to do with increased migration to the US. And this is, in all these three cases, more than 90% of the remittances are coming from the US. So this is a strong sense of the level of integration of these economies with the US labor market and beyond. I put others in context, and Honduras is an interesting one. Honduras does not have dollarization, it has its own currency. And I mention this because it has similar levels of GDP and exposure to remittances. Also, is the case of Guatemala and so on. So, if we look at the remittances, as I said, 97% of it is coming from Salvadorians. That's why it's very difficult to get exact figures on how many Salvadorians live in the US, because a large share of it, according to estimates, between 50 to 60% are not there legally. So there's a lot of illegal immigration. Hopefully Trump will know. I think we don't know that. But definitely the estimates are between 1 and 1.5 million. So 1/4 of the population of El Salvador, which is around 6 billion. 6 billion. So definitely an important number of people that live there. This is a bit more interesting estimate, but you could imagine that people don't remit all the money they create, but rather a share of it. The estimate is somewhere there, it's around 15% of the income. So they roughly create around 4 times the GDP of El Salvador in the US. This is a rough estimate, but it's not completely surprising as well. And definitely speaks of wage differentials, productivity differentials, currency mechanisms, I would say. I think something is interesting to think about here, way beyond what I can say today about remittances. But I was definitely shocked first time I thought about it. How can you have a transnational economy the size of El Salvador that's so much integrated into the US market to this extent? If you look at the balance of payments, 70% is remittances. So it's way more than the agrarian exports, which is only 5% of it. Tourism, which is quite significant, is 12%. So the main way of integration to the world market goes around remittances. I think again, very striking figure. When you look at who receives the remittances, they have a very interesting impact in terms of inequality, and I'll show you how. So 20% of the households receive remittances, around 200 per month. That's the average, and this sometimes comes in weekly installments of 50 or less. So a lot of small amounts of money are going through the remittance channels, and that's around 40% of the income of the lowest quintile. So it's a very significant amount of money for lots of people. It has been a core part of the political agenda. If you check, we were checking parliamentary debates for the year 2021, the Bitcoin law, and Bitcoin is like only a small chunk of it, because a lot of it, when you look, is violence, of course, drugs, and remittance. It's part of the political agenda. I can give you numerous examples, but it's not a marginal one. I think that has a bit to do with it. Another interesting point is cost. So because the way remittances work, you have to go to Western Union and send money. That will be cost between 3 to 5%, depends on some things. But we have been doing some research on the specific ways this is done. People who are illegal in the US cannot resort to the most formal mechanisms. So they have to go through other intermediaries. So when you add up all that, and this is also what World Bank has been saying, costs can be up to 30%. So it's a big range of costs. And now think back on the figure of GDP and see how much of it is going to intermediaries, right? So if you have 25% of GDP, between 5 to 30% is going to someone else. This is an interesting political problem as well to mention. This is also consistent. So one very immediate question is: has this to do with the specifics of drugs? And and is this like a way of money laundering? Well, it doesn't look like. It doesn't look like from all the like qualitative surveys, from all the different statistics published, but also when you look at studies of remittances worldwide, it's quite similar. So you also find that this between 200 and 300 is what people send back from the US and from other economies in the West and so on. So it's not completely outside of this was around 15% of the income of migrants is of those who send remittances back home send roughly 50% of the income, and this is interesting. And probably by income it's mainly in the form of cash, but not only. Sometimes, for instance, you can have your own credit card being used to pay for, for medicine back home, right? And that's a way of sending a remittance. And maybe some of you have done that without knowing it was a remittance, right? I understood I was a remitter at one point. Sending gifts back home is also a remittance. So the impact on inequality is interesting. It's this one. The impact of poverty is similar as well. It's like strictly having a transfer of income to the lowest, mostly to the lowest quintile of the income distribution. So it has contributed to decline in I could put remittances next to here because the correlations that all the evidence looks like definitely has an equalizing moment. Obviously, that's not the only thing it does. It makes livelihoods of many people quite dependent on them. It can be, even though it has been quite stable on a macro level, on a micro level, it can change. It has a moral economy, personal relations, the job of the other, of the migrant, so it definitely that's not all that has to be said. So, qualitative importance, I think, turned into, so this quantitative thing turned into qualitative at one point when you have this large amount of the GDP definitely plays a different role. You can think of this as differential labor rents. Again, it's not something to discuss later on. Has to do, you can have this because of global wage inequalities, otherwise it wouldn't make sense to go to work in the US to send back 15% of your income. Or to live it in the local labor market. Creates a sort of Dutch disease, so having 25% of the income coming from in US dollars from income generated outside definitely creates some sort of non-tradable inflation. We can discuss that as well. And a very important moral economy is transnational social space. Households reproduce themselves thinking that they will depend on some migrant going to the US. Sometimes go there illegally, have to collect money around 6K to be taken there by a coyote, so it's an interesting economy there. And then also discussion of how this is appropriated locally. I will only mention this. Local elites have been finding and trying to have different ways of appropriating chunks of that income or rents locally in El Salvador, and that's a big problem for Salvadorian politics, which is, I think, also part of Bukele's failure in that. Let's just wrap up on it. So, why use Bitcoin as legal tender? Is it like a currency? Well, it's definitely not a currency. I think a currency If you distinguish currency and money, currency you have you have a currency related to state function, but it's also like lots of people, and I won't agree with this, will say it's not money because it doesn't work as such. I will come back to that, but like this is the response to most people saying Bitcoin cannot be a money. I think Bitcoin is a money in different ways, but it has some technical issues. One is what I mentioned, the time it takes to make a transaction. The other one is the idea of non-reversal. Once you have made a transaction, you cannot revert it. You can do another one, giving the money back, but that includes the cost of fees included will be doubled. So there's no reversal of that. Another one, and then there's technical issues of El Salvador. If you look at the of all the economies in the world, why go in El Salvador with that? I will show some data on that in the next slide. And finally, volatility. So can you use something that's quite volatile as money? Then that's another question. Let's take those two, three quickly. So one is infrastructure. Well, 30% of people in El Salvador have a bank account. So the unbanked are the majority, 70%. 70% of those who receive remittances don't have a bank account. How do they receive remittances? Many different ways. They go to the pharmacy, to the supermarket. They get different, like Western Union, different mechanisms through which they get the money. What's the number of ATMs? You see, quite at the bottom of this is World Bank data from 2016. Quite at the bottom of bankarization in El Salvador compared to the region. So lots of structural problems around having Bitcoin. Definitely thinking of So definitely thinking of whether Bitcoin can or cannot be a viable way of doing banking in El Salvador. You have to think of these structural limitations. Again, similar figures, around 30% of people have internet access, and so on. You can imagine that digitalization is not something that's quite universal. So why adopt it? That's a good question. In terms of volatility, I think that there is a point I want to make around you can think of all these limitations. The Salvadorian government didn't thought of this properly. They tried to create ATMs. They created 200 of Bitcoin ATMs initially, but they thought the Chivo wallet app would be the function that would make everything people use Bitcoin and do transactions in Bitcoin. I think that's part of the problem of a problem to look at. The second one is the volatility of the price. Volatility of Bitcoin is not surprising. I think this is the past 5 years. You definitely have long-term and short-term volatility, two different problems for using it as a unit of account. But also, we should not go down into what I would call the moral panic of narratives around cryptocurrencies. And just to say, a lot of the literature points to the structural problems of cryptocurrencies, comparing that to the so-called stability of traditional finance. We have seen crises of like many times the size of the problems of cryptocurrencies in the last 20 years. So nothing new there. Also, if you look at volatility, this is the Honduran Lempira. So whether which one is more volatile in terms of I mean, it is more like if you measure volatility, Bitcoin is more than the Honduran Lempira, but definitely, and you can also predict something about whether the currency. If you know the macroeconomic conditions of the currency, you will understand something about it. But volatility for currencies other than the US dollar is not completely unknown, right? Let's say I'm Argentinian, but that's another thing. So when you look at the Bitcoin as such, seems to be useless as a unit of account. So if I will charge you some amount, for this pizza, something in Bitcoins, I will have to change it a lot because of volatility, right? So definitely not something to look at when you are adopting Bitcoin as a legal tender. You're not thinking of having a new unit of account. So as a store of value, well, it's volatile. It will be a discussion whether as a store of value exactly might be better than US dollar. It's definitely better than most of local currencies, of national currencies in the region. In the long run, in the short run, bit of a question. I think that's the gamble of having Bitcoins as part of your central bank reserves, right? So not clear whether it's good or not as store of value. Some people compare Bitcoin against gold rather than comparing it against dollar. Again, not completely off the mark. Now, as a medium of exchange, people insist it's very weak because of the time it takes to do a transaction. But they don't look at how potentially useful it is as an international means of exchange. And this is where the remittances come to play. If you want not your own currency, which will be the CBDC, but rather a currency that's backed by something else in an international network, not controlled by a state, you could look at cryptocurrencies as a way of doing international transactions. Lots of the banks have been looking at this since since at least 2010. There's been different proposals of having international transactions and again proposals that came back around the politicization and weaponization of SWIFT, looking at using cryptocurrencies or some form of blockchains to have international transactions for money. And this is where theoretically you could see that the only good use of, in terms of functions of money, of Bitcoin could possibly be international means of exchange. In other words, it could be that you want to use it as a way of doing transactions. I will wrap up in 2 slides. So you look at a country that has done experiments with dollarization in 2001. Politically, it was a low-risk bet. You don't have to give up your national currency. You're adding another layer. You are adding another layer that could potentially be useful for international transactions. You could capture, this is, I think, some part of the rationale. They tried to open ATMs in the US. The US didn't allow this to happen, finally, but they had all the contracts with different companies, so that potentially people, rather than going through the channels they use now, could go to an ATM in the US, buy Bitcoin, and then have it extracted in Salvador by your family member. Now, they also wanted that, rather than to be extracted in US dollars, to use as such, and that was the attempt of having it cheap. There's no secret that none of this worked, and I will show that. But it was definitely a low-risk gamble. That was the case. That was how the dollarization was presented in the US, and also the Bitcoinization, the experiment, the Bitcoin experiment, was also a low-risk gamble. Now, the impact was completely marginal. Well, this is the question. So it was unpopular. 70% of people said that was not what El Salvador needed. They all use that for transactions. No secret there. The adoption was driven by this $30 incentive, and then 60% no longer use the app, not even the app, uninstall the app. There were also other problems there. In terms of remittances, which was, I think, what you could expect in terms of the rationality of it, 2% of the total volume. That's official statistics. People still use the existing infrastructure for remittance. 200 ATMs in El Salvador, and then failed the setup of ATMs in the US. So what happened was that, yeah, it was costly. I will move on. It was definitely a costly attempt, but didn't create a loss of instability. And then the adoption seemed to be a way of trying to ensure political leverage, possibly, or solving the problem of remittances. When this started to fail, Bukele tried to launch the Volcano bonds and find some financing from China. China was not in the mood to finance any crypto experiments. They changed policy around 2021 as well. They had this idea of having a Bitcoin city, which was unrealized. So, unstrained relations with the IMF. IMF immediately after this, so a week after the Bitcoin law, they have a blog post saying having cryptocurrencies as legal tender is a bad idea. We're not talking about anyone in particular. It's a bad idea. And then they went on, and you could go like that. So I think I have to conclude with a couple of things here. When you look at this policy, we have to look at in the very peculiar context we're living in. So what will be of currencies in the next 10 to 15 years? It's a bit of a question. And I think the big point here is that, the important point here is that state policies are not rational as such. And this is not just something about El Salvador. This is something about state policy and state policy making. It's quite more chaotic than what post factum rationality can predict. And this is a very important lesson from public policy debates. You see states doing one thing and doing then the other, and then one of these works in terms of creating a new stable set of relations, and then that's how we turn we can understand the rationality. For policymakers, this is also the case. I'm not saying that this El Salvador is an example of policy making. I'm saying it was an experiment. It was an experiment that had some rationality when you look at the conditions, dollarization, remittances, and so on. And then finally, it seems that it didn't work. It didn't work because the context was slightly different. The way the cryptocurrencies is moving, I think, is towards having CBDCs by the usual strong hierarchical currencies of the market, so the euro, renminbi, maybe US dollar, who knows? I mean, that's another question. So it had a low cost, but then now it's definitely being phased out. Is that the IMF doing? Well, in the deal they signed in December, the IMF requested a reform of the Bitcoin law. They removed the word legal tender there. Now it's curso legal, which is the legal circulation, but not legal tender. So, which is with wording, they removed the Article 7 that said it was compulsory, even though it had an article that said that it was not. You can no longer pay taxes in Bitcoin, and you can no longer put prices in Bitcoin. So this is what they agreed. The IMF in exchange of a loan. So the IMF, in a sense, won. We don't know. I don't know whether there was also something that like a good way out of it, right? So having it blamed on the IMF, not unseen in the region. That some of the requests from the requirements of the IMF are coming from local context. So we don't know. And we have lots of open questions. So what will happen with monetary hierarchies and state sovereignty in the long run, in the mid run? What will be the role of cryptocurrencies? And then are they actually used as fixes in Harvey's sense for crisis? I think just wanted to show a bit longer than I expected a policy for that understanding policy or an experiment has to be done in the concrete context of the country, of El Salvador in this case, and B, in the very very complex international order that's seeing lots of different fluctuations around what's going to be the role of the dollar as world currency in the mid run, and having experiments and having policies that try to divert from that. How do you scale dollarization? Big question. I can say about something about the history of it. There are many countries that have scale dollarization, full dollarization, but it's still a question for Ecuador or Salvador how they will undo the dollarization that they should come on. So, thanks for your patience and for your attention, and hopefully we have Q&A.
Thank you very much, Juan.